Hello and welcome. You're watching Market Meter on Money9. I'm Sakshi Batra and this is your show where we recap for you the entire market's trading day action in the first half of trading day. Also, we will share with you the fundamental views by an expert who will share with you the strategy that you should follow from here on in a market like this and which are the stocks and sectors that should be in focus and on your radar as well. Joining in is a very special guest. Kranti Batini, equity strategist at Wealth Mill Securities, joins in. Kranti, very good afternoon to you and thank you very much for joining in on Money9 yet again.
Thank you, Sakshi. Thanks for your invitation for your show.
Thank you very much. Let me begin by asking you, Kranti, on your outlook on the markets currently. We have seen that the markets have again picked up pace. The bulls are back after like a 2-day short break. Although the volatility is quite high, but we are not giving up the 15,000 levels on Nifty just as yet. So how much more steam do you see in markets currently? And how should investors strategize their move now?
Yes, Sakshi, as we have been bullish with respect to Indian markets from quite a long time. One is the earnings sustainability and the rebound in the rural economy. These are the main key factors that are making the market to trade above the all-time high levels, Nifty above 15,000 and Sensex above 50,000 levels. So there is a complete exuberance in the market at this moment, and we have been witnessing continuous FII buying, and also it is supported by some sort of domestic buying also, which are making the markets to sustain about at these higher levels. What is the strategy investors need to maintain, or strategy investors need to follow in this juncture? Is definitely this is a market always buy on dips, and investors at this juncture need to have a vision and courage to buy and patience to hold. And these are the investors that are going to succeed in these markets, even though these levels.
Okay, so even though we are at higher levels, but this is a buy on dips market for sure, and one needs to really have patience and hold for long term into the good fundamental stocks as well. We'll come to your stock picks, but before that, I wanted to take your view on particular sectors like IT, for example. That has been showing a bit of momentum from last 2 or 3 trading sessions. Today, it has been leading. We've been seeing not just the large caps, but even mid caps supporting the IT index as well. Is this space interesting to you at this time? At the current moment with the valuations that they hold right now, the results are out for all of the IT companies so far. So which are the pockets and which are the stocks that you're keeping your eye out on, if at all, in the IT space?
Sakshi, with respect to IT as an overall sector, we rate this sector as a growth sector, and we are quite optimistic about the prospects of IT is concerned. It is the large cap IT and the mid cap IT as a complete pack of IT is concerned. But we overweight with respect to the large cap IT. We don't have any favorite picks, but at this juncture, at every dip, we will be accumulating the large cap IT and also some pockets of mid cap IT.
Right.
As we are witnessing a complete rebound across the globe, IT is the key sector that's going to benefit, but it is with respect to stock specific action is concerned.
Okay, fine.
So an investor want to enter into IT sector at fresh, if they is a first time investor, better to buy the large cap IT stocks at every dip and they can accumulate in their portfolio.
Okay, so large cap IT space is the preferred pick for you in this space of entire information technology space. But today, interestingly, we've seen that the Nifty mid cap is also at record high levels. Do you think the mid cap stocks also warrant some bit of an attention right now over the next 1 year or 2 years? Do you think this space has potential for an outperformance? And which particular sectors for the mid caps would you actually bet for investors?
Sakshi, with respect to mid cap is concerned, one need to be very stock specific in nature.
Okay.
It's not going to be the complete gamut of mid cap stocks they are going to rally. No, but there is tremendous opportunity. The mid cap stocks and the historical valuations of some mid cap stocks are very low. So one need to act as a stock specific is concerned. It's not sectoral specific. It should be stock specific. One need to consider the business prospects of the company and the management of the company, how the valuations looks at this moment is extremely important to enter into mid caps at this point of time. You should not blind any mid cap. It should be very stock specific to take a call on mid caps are concerned.
Okay. Do you still like banks and financials at this moment? We have seen a huge run up after the budget also, and this was the space that really outperformed in the post budget rally. But do you see there is still upside left in this pocket? And which pocket would that be? Would it be mortgage financials, or would it be the private banks or the PSU banks?
Sakshi, if we have to divide financial sector as a whole, as you are aware, financial sector, banks and NBFCs and financial sector as a whole is the epicenter of the economy. So as there is a rebound in the earnings of the companies and also rebound in the growth of the company, and we are expecting a double-digit growth in the next financial year. So banking and financial services is going to be the key beneficiary of this growth. So one need to take a call on banking. Okay, our favorites are the private retail centric banks, and one need to take can enter into NBFC space also, as currently the flower is coming back with respect to NBFC space, and also investors also can buy the large cap insurance stocks with respect to the financial sector is concerned.
True, true, true.
So this is all about the investor, how they want to position themselves with respect to the banking as a whole.
Okay, I understood. Kranti, let me at this point in time bring in the stocks that you had recommended on our show also previously, and congratulations to you. They have actually garnered huge returns as well after you had recommended it to our on our show as well. There you have it on your screens. Hemisphere Properties was recommended by Kranti on January 27th at about 131 rupees. Already we have seen a run-up of over 46% here. Subex Limited also was given by Kranti on February 3rd at about 24.9 rupees per share, and we have already seen a return of 20% as of today right now, and the gains are only escalating. Kranti, let me take your view on these two stocks first, and then we will come to your new fresh picks also for investors. Do you think these two stocks still have the potential and investors should still buy these stocks or continue buying? And if at all, what are the new targets that you would be giving?
At this point of time, investors need to keep in mind the margin of safety is extremely important to accumulate any stocks in their portfolio. With respect to Hemisphere Properties, as we mentioned the stock in your show a couple of weeks back on 27th Jan, the stock valuations are very attractive, and there is the valuations of the company are very attractive. There is an immense potential upside we identified in this company, and thanks to the market, stock has been rallied in the last 3 weeks nearly above 40%. So at this juncture, because the strategy investors need to follow at this juncture is, whenever you find any kind of excessive profits, it's better to take some cash from the table. So we advocate investors, if you bought some 100 shares, better to take some 25% of the money from the table at this juncture, since the stock has run up within a short time.
Okay.
As we always mention, as I told, investors need to have a vision and courage to buy and patience to hold.
Right.
So every dip, investors can accumulate these stocks. As price changes, the perception of the investors in these markets. So in terms of the price is concerned, there is a action we have witnessed. So the perception of the people changed, but the valuations looks a little bit stretched. So any dip is encouraged to buy and keep holding these stocks for long term.
Okay, so these are bets for the long term. You can continue holding these stocks and accumulating on dips as well. These are good stocks that can create long-term returns and good returns for you and your portfolio as well. Let's come to today's picks as well. I wanted to ask you about the auto sector and the auto ancillary space as well. Both of them have run up quite sharply, but do you see any particular sector or stock from this space that may still have the potential and investors can look at that?
Sakshi, with respect to auto sector, we have been quite optimistic and quite sanguine with respect to auto from past 6 months, from the pre-COVID levels, from pre-COVID levels, because we expect the COVID pandemic will bring and increase the demand for autos, because nowadays every commuter want to travel in their personalized transport rather than traveling in the public transport or the ride hailing apps are
Right.
concerned. So because of the severity of the virus, people want to travel in their personal transportation. So that's the key reason for complete rebound in the auto sector is concerned. If you check with any of the auto dealer right now, many models in auto sector, many models in auto mobiles, they have a waiting period more than 3 months.
Right.
So this is the pent up demand we are witnessing.
Right.
So we have one stock with respect to auto are concerned. We have a stock by name Bharat Seats. This is an associate company of Maruti, where Maruti holds nearly 14% and Suzuki Corporation holds 14% in this company. Combined together, the promoter group is holds 75% in this company. They supply seats to Maruti. As there is a complete rebound in the auto sales, the earnings of Bharat Seats is going to do well in next couple of quarters. And also the company is slightly diversifying their model from a business model from four-wheeler to two-wheeler. They are one of the key supplier for the seats to Suzuki. And also the the quality of the management is key for this company. So there are a couple of directors from Suzuki International on this board. So put together with the sector and the management, Bharat Seats can deliver decent returns from this level. So investors looking for long-term investments, they can start accumulating Bharat Seats at these valuations.
Okay. So Bharat Seats can be accumulated at the current levels of 84.5, still a 20-25% upside over the long term is what you can expect. Another call from you for today?
The other call, as there is a lot of emphasis was given in this budget with respect to infra and power infrastructure and capital goods is concerned. So the other stock we have for day for the investment for the investors is a Schneider Power Infra, as there is a lot of emphasis is given towards the smart cities. This company, because of the pedigree of the management and also valuations, and there is a complete rebound with respect to infrastructure spending by the government is concerned. So we educate investors to buy Schneider Electric Infra at this moment. The stock can deliver decent returns in the coming quarters.
Okay, wonderful. 105 rupees is the current market price. Again, a 20-25% upside can be seen on the stock over the long term as well. And the last pick for you for today?
The other stock we have is ABB Power Infra. It is Hitachi Power Infra. It's also the same kind of similar power infra story. As the sector is going to do well in the coming quarters, investors with respect to ABB Power is concerned, they can enter and start accumulating this stock at every dip. And also, one of the business model the company is into is they are going to promote and provide the infrastructure for electric car charging and electric buses charging. This is the one of the their specialized business which is going to do well in the coming, because everyone expect the future is the electric vehicles and electric mobile. The company is in the initial phase and they started their initial experiments in some metro cities. So as the capital goods sector is going to do well, ABB Power Infra looks very attractive at these levels, at this market juncture.
Okay. All right, so ABB Power 1305 is the current market price. Sharp upside from the current levels can be expected, about 20-25% returns from these levels as well. So attractive levels and valuation as well that you can really bet on in the current scenario. Thank you very much, Kranti, for joining in with your market outlook on our show, as well as sharing these stock recommendations with you. Many more interactions to come on Money9 with you as well. Thank you very much for joining in. Let's move on and just see how the markets have been performing at the current moment. moment. Now, we have been seeing that there was a slight bit of volatility, but the markets are still holding up quite in the green, about 0.25% higher for Sensex and the Nifty both. 51,667 current level for the Sensex. The Nifty is also up about 38 points at the moment. 15,211. We have jumped up over 15,211 now. Remember that the technical experts who've come on our show have been talking about the 15,250 as the crucial support level for the Nifty. Now, if that gets breached, or the resistance level, if that gets breached on the upside, then we could actually see further momentum on the Nifty index as well. The Bank Nifty is also outperforming at the moment, 1% higher for the Nifty Bank, 36,111. So we are back above the 36,000 level for now. The mid cap and the small cap indices again performing quite well, with the small cap up about 0.5% in trade and 0.2% up for the mid cap index as well. Moving on to the sectors that are performing at the moment. You can actually see some of the sectors like the private sector banks are holding up and providing some support to the markets at the moment. Financial services are doing well too. And if you see, the PSU bank has also recovered and is up about 0.85% in trade. 0.5% gain for the IT index, and the media stocks are also providing some support. The FMCG index, however, is underperforming the markets right now with over 1% loss, with metals and pharma also down about 0.5% to 1% in trade right now. So some bit of profit booking coming in for the metal space at the moment. The top gainers and the losers also will be important to watch out for at this hour. Adani Ports, IndusInd Bank, Tata Motors and Infosys, also Axis Bank are the top gainers at the moment, up about 1.5% to 3% in trade. Adani Ports is really leading, with IndusInd Bank following up close at 3% uptick over here. As far as the losers are concerned, you can actually see ITC after the results has been disappointing the street with 4% loss on the stock price. Coal India, NTPC, ONGC are the other stocks that are still seeing some bit of profit booking over here. Sun Pharma, which was actually providing support in the early trade, is now down about 1.5% in trade right now. So this is as far as the market update is concerned, but we'll keep getting you more updates on markets and also on personal finance on Money9. So stay tuned with us. Thank you very much for joining in.